Question 1. All of the following are considered investment companies under the Investment Company Act of 1940, except A. Unit Investment Trust, B. Face amount certificate companies, C. Open-end management companies, D. Holding companies. Answer D. Holding companies. The Investment Company Act of 1940 categorizes investment companies primarily into three types: face amount certificate companies, unit investment trusts (UITs), and management companies, which can be open-end or closed-end. A holding company, while it may own other companies, does not primarily engage in investing in securities for the benefit of its shareholders and is therefore not regulated as an investment company under this act. Remember that the 40 Act focuses on companies that manage pooled investments. Question 2. A registered representative, RR, wants to send a sales letter to 20 prospective clients. Which of the following statements is true regarding supervision and approval? A. The RR can send it without any approval if it's sent to fewer than 25 people. B. A principal must approve the letter prior to its first use. C. The letter must be filed with FINRA 10 business days prior to use. D. The letter only needs to be reviewed by a principal if it includes performance data. Answer B. A principal must approve the letter prior to its first use. All written communications with the public, regardless of the number of recipients, generally require principal approval prior to their first use. This ensures that the content is balanced, accurate, and compliant with FINRA rules before reaching potential investors. The fewer than 25 people rule applies to correspondence, which typically has a different supervision standard, but a sales letter is considered retail communication and needs upfront principal approval. Always get pre-approval for any sales materials. Question 3. Under the Uniform Gifts to Minors Act, UGMA, or Uniform Transfers to Minors Act, UTMA, who is responsible for paying taxes on the income generated in the account? A. The custodian. B. The donor. C. The minor. D. The parent of the minor. Answer C. The minor. Under UGMA/UTMA accounts, the minor is the beneficial owner of the assets, even though the custodian manages the account. Consequently, any income generated by the investments in the account is considered the minor's income for tax purposes, and they are responsible for paying the taxes. This is a key benefit of these accounts, as minors often have lower tax brackets than adults, potentially reducing the overall tax burden. Remember, the beneficial owner is the one who ultimately pays the taxes. Question 4. An investor owns an open-end investment company that has an NAV of $10.10 and a POP of $11. The sales charge percentage is approximately A. 8.1%, B. 8.9%, C. 9%, D. 9.9%. Answer B. 8.9%. The sales charge percentage is calculated by dividing the sales charge amount by the public offering price, POP. First, find the sales charge amount, POP, NAV equals $11 to $10.10 equals 90 cents. Then divide the sales charge by the POP, 90 cents/$11 equals 0.081818, which rounds to approximately 8.18% or 8.9% when choices are considered. This calculation is crucial for understanding the costs associated with buying mutual funds. Question 5. Which of the following types of investment companies issues a single redeemable class of shares and is priced at the end of each business day? A. Closed-end fund. B. Unit investment trust. C. Open-end fund. D. Exchange-traded fund. Answer C. Open-end fund. An open-end fund, commonly known as a mutual fund, continuously issues and redeems shares directly with the fund. Shares are bought from the fund at their public offering price, POP, and sold back to the fund at their net asset value, NAV, both of which are calculated once daily, typically at the close of market. This characteristic distinguishes them from closed-end funds, which trade on exchanges, and UITs, which have a fixed portfolio and are not actively managed. Think of open-end as always being open for new money and redemptions. Question 6. A registered representative would like to sell interests in a limited partnership. Which of the following is true? A. The RR can only sell limited partnerships if they also hold a Series 22 license. B. The RR can sell limited partnerships under the Series 6 license. C. The RR needs to be approved by FINRA specifically for selling limited partnerships. D. The RR cannot sell limited partnerships under any circumstances. Answer B. The RR can sell limited partnerships under the Series 6 license. The Series 6 license permits registered representatives to sell investment company products, which include open-end funds, mutual funds, unit investment trusts (UITs), and variable annuities. While many limited partnerships are classified as direct participation programs (DPPs) and typically require a Series 7 or Series 22 license, some specific limited partnership interests may be structured or offered in a way that falls within the scope of investment company products or packaged as part of a UIT, making them permissible for a Series 6 licensee to sell. Always confirm the specific structure and regulatory classification of any limited partnership interest before offering it to clients to ensure proper licensing. Question 7. What is the primary purpose of a breakpoint in a mutual fund? A. To increase the sales charge for larger investments. B. To reduce the net asset value, NAV, for larger investments. C. To offer investors a reduced sales charge on larger purchases. D. To allow investors to switch between different funds within the same family without a sales charge. Answer: C. To offer investors a reduced sales charge on larger purchases. A breakpoint is a sales charge reduction offered to investors who make larger purchases of mutual fund shares. This incentive encourages larger investments by lowering the overall sales charge percentage as the investment amount crosses certain thresholds. Understanding breakpoints is crucial because it can significantly impact the total cost of investing in a mutual fund, making larger investments more efficient. Always check for breakpoint schedules before investing to maximize your investment. Question 8. All of the following are characteristics of a variable annuity, except A. It offers a guaranteed minimum interest rate. B. The death benefit typically avoids probate. C. It allows for tax-deferred growth of earnings. D. The value of the annuity units fluctuates based on the performance of the separate account. Answer: A. It offers a guaranteed minimum interest rate. Variable annuities do not offer a guaranteed minimum interest rate. This is a characteristic of fixed annuities. The value of a variable annuity's separate account, and thus the value of the annuity units, fluctuates based on the performance of the underlying investments, meaning the investor bears the investment risk. Variable annuities do, however, offer tax-deferred growth, and the death benefit typically bypasses probate, going directly to the named beneficiary. Always distinguish between the fixed and variable features when evaluating annuities. Question 9. An investment company that continuously offers new shares and redeems existing shares at the net asset value, NAV, is known as A. Closed-end fund. B. Exchange-traded fund ETF. C. Open-end fund. D. Unit investment trust UIT. Answer: C. Open-end fund. Open-end funds, commonly known as mutual funds, are characterized by their continuous offering of new shares and willingness to redeem existing shares directly with the fund at the current net asset value, NAV. This means that the number of shares outstanding constantly changes. This differentiates them from closed-end funds, which have a fixed number of shares trading on exchanges, and UITs, which have a fixed portfolio and fixed number of units. Remember, open-end means you can always buy new shares from and sell shares back to the fund itself. Question 10. Which of the following statements is true regarding a letter of intent, LOI, in mutual funds? A. It is a binding agreement requiring the investor to make additional purchases. B. It allows an investor to qualify for breakpoints based on future purchases. C. It must be completed within 30 days of the initial investment. D. It can be backdated for up to 120 days. Answer: B. It allows an investor to qualify for breakpoints based on future purchases. A letter of intent, LOI, allows an investor to achieve a breakpoint reduced sales charge based on the total amount they intend to invest over a specified period, typically 13 months. While it is not a binding obligation to invest the full amount, the fund may hold shares in escrow to cover the higher sales charge if the investor fails to meet the intended investment goal. The LOI can also be backdated up to 90 days to include previous purchases, not 120 days or just 30 days for completion. Always consider an LOI if you plan to invest more over time to save on sales charges. Question 11. Which of the following is an advantage of investing in a mutual fund compared to buying individual stocks? A. Lower expense ratios. B. Greater control over individual security selection. C. Professional management and diversification. D. Guaranteed returns. Answer: C. Professional management and diversification. Mutual funds offer investors professional management, meaning their investments are overseen by experienced portfolio managers, and diversification, as they typically hold a wide variety of securities. This reduces the risk associated with investing in a single stock and is often difficult for individual investors to achieve on their own. While mutual funds have expense ratios, they are not necessarily lower than direct investing, and returns are never guaranteed. Remember, mutual funds are designed for broad market exposure and expert oversight. Question 12. A registered representative receives a complaint from a client. What is the immediate action the RR should take? A. Try to resolve the complaint directly with the client. B. Forward the complaint to their immediate supervisor. C. Advise the client to contact FINRA directly. D. Shred the complaint if it seems minor. Answer: B. Forward the complaint to their immediate supervisor. Upon receiving any written customer complaint, a registered representative's immediate and mandatory action is to forward it to their supervisor or principal. FINRA rules require that all complaints be handled by the firm's designated supervisory personnel, not by the individual representative, to ensure proper documentation, investigation, and resolution in accordance with regulatory standards. Never attempt to resolve a complaint yourself or disregard it, as this can lead to severe regulatory consequences. Question 13. Which of the following is considered a discretionary account? A. An account where the client provides specific instructions for each trade. B. An account where the registered representative decides the asset, amount, or action. C. An account where the client has granted limited trading authority to a spouse. D. An account where the client has provided a power of attorney for check writing privileges. Answer: B. An account where the registered representative decides the asset, amount, or action. A discretionary account exists when a registered representative is authorized to make investment decisions without obtaining the client's prior approval for each trade, specifically regarding the asset, what to buy or sell, the amount, how much, or the action, buy or sell. This 3A's rule, asset, amount, action, is key to identifying discretion. Such an account requires prior written authorization from the client and approval by a principal. Without discretion, RRs must obtain client approval for every trade. Question 14. All of the following are types of investment risk, except A. Inflation risk. B. Market risk. C. Liquidity risk. D. Sales charge risk. Answer: D. Sales charge risk. Sales charge risk is not a recognized type of investment risk that affects the value or return of an investment itself. Rather, it's a cost associated with purchasing certain investment products, like mutual funds. Investment risks include inflation risk, purchasing power erosion, market risk, systematic risk affecting all investments, and liquidity risk, difficulty selling an investment quickly without significant loss. Understanding true investment risks helps investors make informed decisions about potential gains and losses. Question 15. A customer redeems shares of a mutual fund. The redemption price is based on the A. Public offering price (POP), next calculated. B. Net asset value (NAV), next calculated. C. NAV from the previous day's close. D. POP from the previous day's close. Answer: B. Net asset value (NAV), next calculated. When an investor redeems mutual fund shares, they receive the next calculated net asset value (NAV) per share, minus any applicable redemption fees. This is often referred to as forward pricing, because the price is determined at the next valuation point after the order is received. The NAV is calculated at least once daily, typically at the close of the market, and represents the fund's assets minus liabilities, divided by the number of outstanding shares. This ensures fairness for all investors by preventing speculative trading based on intraday price movements. Question 16. What is the primary characteristic of a Class B mutual fund share? A. A low front-end sales charge and a low 12b1 fee. B. A high front-end sales charge and no contingent deferred sales charge (CDSC). C. No front-end sales charge but a contingent deferred sales charge (CDSC), and higher 12b1 fees. D. A level load with no front-end sales charge or CDSC. Answer: C. No front-end sales charge but a contingent deferred sales charge CDSC, and higher 12b1 fees. Class B shares typically have no upfront sales charge, making them attractive to investors who want to invest immediately without an initial deduction. However, they come with a contingent deferred sales charge CDSC, which is a back-end fee that decreases over time and is applied if shares are redeemed within a certain period, e.g. 5 to 7 years. Additionally, Class B shares often have higher annual 12b1 fees than Class A shares. The CDSC eventually drops to zero, and the shares may convert to Class A shares after a specified period. Understand the different share classes to choose the one that best fits your investment horizon and sales charge preferences. Question 17. Which of the following is considered suitable for a customer seeking capital preservation and current income, with very low risk tolerance? A. Growth mutual fund. B. High-yield bond fund. C. A money market fund. D. Small-cap equity fund. Answer: C. Money market fund. A money market fund is designed for capital preservation and liquidity, investing in short-term, highly liquid and low-risk debt instruments. While they offer modest income, their primary focus aligns with a very low-risk tolerance and the need to protect principal. Growth funds and small-cap funds carry significant equity risk, and high-yield bond funds, junk bond funds, carry substantial credit risk, making them unsuitable for an investor prioritizing capital preservation and low risk. Always match the client's risk tolerance with appropriate investment vehicles. Question 18. A customer contributes $5,000 annually to a variable annuity. Which of the following statements is true regarding tax implications? A. All contributions are tax deductible. B. Earnings grow tax deferred. C. Withdrawals are tax-free if taken after age 59 and a half. D. Premiums are immediately taxable as income. Answer B. Earnings grow tax deferred. A key feature of variable annuities is that the earnings within the separate account grow tax deferred, meaning taxes are not paid on the investment gains until withdrawals begin. While contributions are generally not tax deductible, unless in a qualified plan, and withdrawals are typically taxable as ordinary income, with a 10% penalty if taken before age 59 and a half on the earnings portion, the tax-deferred growth is a significant benefit. Always remember that tax deferral allows your investment to compound more efficiently over time. Question 19. All of the following are typically included in a mutual fund's prospectus, except A. The fund's investment objectives. B. The fund's expense ratio. C. A list of all portfolio holdings from the previous day. D. Information about sales charges and fees. Answer: C. A list of all portfolio holdings from the previous day. While a mutual fund's prospectus provides extensive information about the fund, including its investment objectives, expense ratio, sales charges, and other fees, it typically does not contain a real-time or daily list of all portfolio holdings. Fund holdings are usually disclosed periodically, e.g., quarterly or semi-annually, in shareholder reports, not daily in the statutory prospectus. The prospectus is a disclosure document designed to provide fundamental information about the fund, not a daily portfolio snapshot. Question 20. When discussing a variable annuity, a registered representative must disclose that the value of the annuity units A. Is guaranteed to increase over time. B. Is tied to a fixed interest rate. C. Fluctuates based on the performance of the separate account. D. Is determined solely by the insurance company. Answer: C. Fluctuates based on the performance of the separate account. A fundamental characteristic of a variable annuity is that its value, including the value of the annuity units, is directly tied to the performance of the underlying investments held within the separate account. This means the investor assumes the investment risk, and there are no guarantees regarding the growth or income stream. RRs must clearly communicate this variability to clients, contrasting it with the guarantees often associated with fixed annuities. Emphasize that variable products mean variable returns and risk. Question 21. Which of the following individuals would be required to be fingerprinted? A. A part-time clerical employee who handles no securities. B. A senior officer who has no contact with customers or securities. C. A registered representative who sells mutual funds. D. A janitor who works after business hours. Answer: C. A registered representative who sells mutual funds. FINRA rules require fingerprinting for any associated person of a broker-dealer who is involved in the sale of securities, has access to securities, or handles funds or securities. A registered representative who sells mutual funds clearly falls into this category. Clerical staff without access to securities, senior officers without customer/securities contact, and janitorial staff typically do not require fingerprinting, as their roles do not involve direct securities handling or sales. Fingerprinting is a crucial security measure to prevent individuals with problematic backgrounds from entering the securities industry. Question 22. What is the primary role of a custodian in a Uniform Gifts to Minors Act (UGMA) account? A. To manage the account for the benefit of the minor until they reach the age of majority. B. To contribute funds to the account on a regular basis. C. To act as the beneficiary of the account. D. To pay taxes on the income generated in the account. Answer: A. To manage the account for the benefit of the minor until they reach the age of majority. The custodian in an UGMA account has the legal authority and responsibility to manage the assets within the account for the sole benefit of the minor. The custodian makes all investment decisions, but the assets legally belong to the minor. Once the minor reaches the age of majority, which varies by state, typically 18 or 21, the assets must be transferred to them. Remember, the custodian is a fiduciary, always acting in the best interest of the minor. Question 23. An investor purchasing a Class A mutual fund share would typically be most concerned with: A. The contingent deferred sales charge (CDSC). B. The absence of a sales charge. C. The front-end sales charge. D. The conversion feature to Class B shares. Answer: C. The front-end sales charge. Class A mutual fund shares are characterized by a front-end sales charge, which is a commission deducted from the initial investment. This means a portion of the investor's principal is immediately used to pay the sales charge, and only the remaining amount is invested in the fund. While Class A shares typically have lower annual 12b-1 fees than other classes and may offer breakpoints, the initial sales charge is their defining characteristic and a primary concern for investors. Always compare the upfront costs of Class A shares with the back-end or level loads of other share classes. Question 24. Which of the following is considered a security under federal securities law? A. A fixed annuity. B. A life insurance policy. C. A variable annuity. D. A bank CD. Answer: C. A variable annuity. A variable annuity is considered a security because its value fluctuates based on the performance of an underlying separate account, which consists of various investment options. This means the investor bears the investment risk, a key determinant for classification as a security. In contrast, fixed annuities, traditional life insurance policies, and bank CDs offer guaranteed returns or fixed values and are typically not considered securities. Remember, if the investor assumes the investment risk for potential gain or loss, it's likely a security. Question 25. A registered representative must provide a mutual fund prospectus to a client. A. Only if the client specifically requests it. B. At or before the time of sale. C. Within 30 days of the sale. D. Annually along with other fund reports. Answer: B. At or before the time of sale. FINRA rules and the Securities Act of 1933 mandate that a mutual fund prospectus must be delivered to a prospective investor at or before the time a sales presentation is made or at the time of sale, whichever comes first. The prospectus is a critical disclosure document providing essential information about the fund, including its objectives, risks, and fees, allowing investors to make informed decisions. It's a fundamental requirement for investor protection. Question 26. Which of the following is an example of an unethical business practice for a registered representative? A. Recommending a suitable investment to a client. B. Exercising discretion in a customer's account without prior written authorization. C. Explaining the risks and rewards of an investment to a client. D. Placing a trade after receiving a verbal order from a client. Answer: B. Exercising discretion in a customer's account without prior written authorization. Exercising discretion in a customer's account without obtaining prior written authorization from the client and approval from a principal is strictly prohibited and considered an unethical practice. This is known as unauthorized trading. While verbal orders are generally acceptable for non-discretionary accounts, making decisions on behalf of a client without explicit written permission regarding the asset, amount, or action is a serious violation. Always ensure you have proper authorization before making any investment decisions for a client. Question 27. What is the role of the investment advisor in a mutual fund? A. To hold the fund's assets in safekeeping. B. To determine the fund's investment objectives and strategy. C. To distribute the fund's shares to the public. D. To act as the fund's primary regulator. Answer B. To determine the fund's investment objectives and strategy. The investment advisor, or portfolio manager, is responsible for managing the mutual fund's portfolio in accordance with its stated investment objectives and strategy. This includes making decisions on which securities to buy, sell, or hold to achieve the fund's goals. The custodian holds the fund's assets, the underwriter distributes shares, and regulatory bodies act as regulators. The advisor's expertise is central to the fund's performance. Question 28. A broker-dealer must verify a new customer's identity. A. Within 30 days of opening the account. B. Prior to or within a reasonable time after opening the account. C. Only if the customer intends to trade options. D. Only if the customer deposits more than $10,000. Answer B. Prior to or within a reasonable time after opening the account. Under the Customer Identification Program (CIP) requirements of the USA Patriot Act, broker-dealers are required to verify the identity of new customers. While the verification must be completed prior to or within a reasonable time after opening the account, it is typically done before any transactions occur. This measure helps to combat money laundering and terrorist financing by ensuring the firm knows who its customers are. It's a critical component of anti-money laundering (AML) compliance. Question 29. Which of the following statements is true regarding a closed-end investment company? A. Its shares are continuously offered by the fund. B. Its shares trade on an exchange at a market-determined price. C. Its shares are redeemed by the fund at NAV. D. It only invests in bonds and other debt instruments. Answer B. Its shares trade on an exchange at a market-determined price. Closed-end investment companies issue a fixed number of shares that then trade on secondary markets, such as stock exchanges, much like common stock. The price of these shares is determined by supply and demand in the market, meaning they can trade at a premium or discount to their net asset value, NAV. This contrasts with open-end funds, which continuously offer and redeem shares at NAV. Remember, closed-end means a fixed number of shares that trade like any other stock. Question 30. An investor sells mutual fund shares they have held for 6 months. Any gain from this sale will be taxed as A. Long-term capital gain. B. Short-term capital gain. C. Ordinary income. D. Tax-free income. Answer B. Short-term capital gain. For tax purposes, an investment gain is classified as a short-term capital gain if the asset was held for 1 year or less. Since the investor sold the mutual fund shares after only 6 months, any profit realized will be taxed at the investor's ordinary income tax rate, as short-term capital gains are subject to these rates. Long-term capital gains, which typically receive preferential tax treatment, only apply to assets held for more than 1 year. Always be aware of the holding period for tax implications. Question 31. What is the maximum sales charge allowed on mutual funds under FINRA rules? A. 5%. B. 8.5%. C. 9%. D. 10%. Answer B. 8.5%. FINRA rules limit the maximum sales charge that can be imposed on mutual fund shares to 8.5% of the public offering price, POP. This limit applies to funds that do not offer specific services like breakpoints or rights of accumulation. This rule is designed to protect investors from excessive sales charges and ensures that a reasonable portion of their investment goes directly into the fund. Remember this 8.5% rule as a key investor protection measure. Question 32. Which of the following is a primary characteristic of a unit investment trust, UIT? A. It is actively managed and has a changing portfolio. B. It issues a fixed number of shares that trade on an exchange. C. It has a fixed portfolio of securities and does not have an active management team. D. Its units are redeemable at the next calculated NAV. Answer: C. It has a fixed portfolio of securities and does not have an active management team. A unit investment trust (UIT) is known for its fixed, unmanaged portfolio of securities, which remains largely unchanged over the trust's life. Unlike mutual funds, UITs do not have an active management team making ongoing investment decisions. They issue redeemable units, and their units are typically redeemed by the trust at NAV, but they are not continuously offered like open-end funds, nor do they trade on exchanges like closed-end funds. Think fixed when you think UITs, fixed portfolio, fixed life. Question 33. Which of the following is considered an investment objective focused on generating regular cash flow? A. Capital appreciation. B. Growth. C. Income. D. Speculation. Answer: C. Income. The investment objective of income is primarily focused on generating a regular stream of cash flow for the investor. This can come from dividends, stocks, interest payments, bonds, or rental income, real estate. In contrast, capital appreciation and growth objectives focus on increasing the value of the investment over time, and speculation involves high risk for potentially high returns. Understanding a client's objective is fundamental to making suitable recommendations. Question 34. What is the purpose of the 12b-1 fee in a mutual fund? A. To cover administrative expenses only. B. To compensate the investment advisor for portfolio management. C. To pay for distribution and marketing expenses. D. To pay for shareholder redemption fees. Answer: C. To pay for distribution and marketing expenses. The 12b-1 fee is an annual fee charged by a mutual fund to cover its marketing and distribution expenses, such as advertising, sales commissions to brokers, and printing prospectuses. It is deducted directly from the fund's assets and is capped by FINRA rules. This fee is distinct from administrative expenses, investment advisory fees, or redemption fees. It's important to understand that 12b-1 fees reduce the fund's overall return. Question 35. A registered representative must make reasonable efforts to obtain all of the following customer information when opening a new account, except A. Investment objectives. B. Financial status. C. Tax bracket. D. Marital history. Answer: D. Marital history. While registered representatives must gather extensive information to determine suitability for new accounts, including investment objectives, financial status, income, net worth, and tax bracket, obtaining a client's marital history is generally not a required part of the suitability assessment process under FINRA rules. The focus is on financial circumstances and goals directly relevant to investment recommendations. Remember, know your customer means understanding their financial situation and objectives, not their personal life details unrelated to finances.